Hello, master traders and money magnets. We got to prepare tomorrow. FOMC will be releasing at 2 o'clock p.m. Eastern Time. Uncle Powell will come speak to us at 2:30 p.m. Eastern Time, and it's going to be amazing. I have a feeling, you can even call it a prediction, but I have a feeling that the market is going to go crazy tomorrow when Jay Powell comes to speak and FOMC gets released. Well, today was an okay type of day, kind of underwhelming for some people because, well, you guys can see from the morning till the very end of the day, it just chopped. It was range bound. I had a chop range of 559 up to 562. Range bound, guys. How did we trade it? Well, I wrote in the Discord this morning to be bullish. 565 and 566.5 must clear. And I wrote if below 565, the next support's at 563.5. If it fails next, 562 and 560.8 would be in play. So the point was to look to long above 565 and 566.5 with 568 and 570 in play, or look to short if below 565 and if next support at 563.5 fails. And you guys can see on the 15-minute chart once again, we rejected from this 565 level. Almost a perfect rejection. Broke down 563.5. Broke down 562. It was a great breakdown, guys. Amazing breakdown. Amazing breakdown. And it led to a lot more downside. $6 move, but unfortunately, if you missed that first drop of the day, the market didn't give us much of a setup. It was just range bound, up and down, 562 down to 559 range. But usually, when you see a chop like this and data released the next day, usually it would lead to a trend day. So fingers crossed that when FOMC drops tomorrow, we are going to get a trend day. Nothing like today, a chop day. I'm expecting a trend day. So we got to be ready. We have to be ready for tomorrow. It can go up, it can go down. But how will we know and how will we trade it? Well, one thing I want to mention is that we recaptured and cleared the 566.4 level and the 565 level. But today we broke down those levels. So that's a false breakout setup as of right now. However, we also back tested the 5 daily moving average as support. We recaptured the 5 daily moving average last Friday, so a back test of it to turn it back into support would be healthy, and if successful would be a sign of more upside. So there's reasons to be bearish, lots of reasons to be bearish. But there is a slight of hope for the bulls. And I believe tomorrow with FOMC, we're going to find out who will win. If the bears are to win, 560.8 must fail as support. We close around that area today, around there. But if we're below tomorrow and we break down that 559 level, which held as support today, more downside incoming. I would favor Monday's high, a lower high, with 556.4, 555, 552, and 550 all in play. And if this is a continuation of the downtrend, then the last pivot low was around 549.6-ish. Very good chance that that level can break down. But that won't be possible to hit unless we break down 560.8 and 559 tomorrow. And as far as being bullish goes, the 5 daily moving average must hold, or the fib level at 560.8 must hold as support. And to trust the bounce, it must clear resistant levels. Okay, I have 562, 563.5, 565, and 566.4. All must clear to put 570 or higher in play. All must clear. And tomorrow with FOMC, releasing 2 o'clock Eastern time, I don't expect that we will get a chop like today. Today was the calm before the storm, and I think the storm is going to be amazing. Either way, sheeps are going to make it rain on the market makers. Believe that. Now moving on to triple Q, we had a nice pullback, and yes, it does look bearish. But with FOMC tomorrow, anything can happen. Many of you guys already know that. So let's be prepared, know the levels and setups beforehand, so that when the data gets released, we'll be able to react to it. We'll be slipping, bobbing and weaving like we're Mike Tyson in his prime. Now, if the market makers plan to be bearish and they're going to push it down, that fib level support at 474 must break down to put those lower targets in play. It's actually at 474.2 to put 473, 471, 469. The fib level at 467.3 is all in play, and with FOMC, it just might be strong enough to break through that fib level. Now, if the plan is to be bullish, 475.5, 477, and the fib level at 479 must recapture to put 484 or higher in play. It's going to be very volatile with FOMC, guys. Tesla looking bearish. Okay, triple Q and SPY is showing mixed reactions on the charts right now. Well, SPY is showing mixed reaction. Triple Q is looking a little more bearish. But Tesla definitely look bearish. We had this potential double top around the 252-ish area. We had a potential double bottom around the 232.6-ish area. That was a chop range, a big chop range, but it was still a range. And Tesla gapped below the double bottom. That qualifies, in my opinion, as a breakaway gap. And in this context would be a bearish breakaway gap. So because of that, because of the gap, I, Uncle Chartist, am bearish. Now, I'm always willing and open-minded to it changing, okay? So the bull case, we have to look at what levels were lost today, okay? A few levels were lost: 226, 227.5, 229, and 230.4. Those levels must recapture to kickstart a bounce to put 233, 234.5, and the gap fill at 238 or higher in play. Now, like I said, we have a bearish breakaway gap. Overall, I am bearish below 232.6 because of where the double bottom was and where we gapped away from. All right, I'm bearish as long as below. And if there is bearish follow through tomorrow, the next fib level I have is at 224.5. If that level fails, we are dropping a lot lower, down to 223, 221, 217 or lower in coming. NVDA looks like the dark cloud cover candle played out. If you guys traded that setup, congratulations, it was beautiful. As of right now, 115 and 113 fib level are support levels and in play as long as below 117. 113 is the fib level, so if that level is lost, very bearish with the gap fill around 108.7-ish in play. As usual, do not call a bottom unless we get a false breakdown setup. So from here, 115 and 117 must recapture to put 119.5 fib level, but also a gap zone in play. And above 119.5, I would be bullish on NVDA, at least for the short term again. But right now it's looking bearish. And if 115 and 113 is lost tomorrow, bearish, follow through. Okay, guys, now there's one more ticker symbol that I'd like to, two more ticker symbols that I'd like to talk about before I let you guys go. I will be making a morning video where I'm talking about all my ticker symbols, guys. So please, if you're not, please make sure you're subscribed and turn on the notification bell, okay? So you don't miss the morning video and the aftermarket video. I make, a lot of times I make 2 videos a day. I love to spend time with you guys, and you know, I'm just trying to bring value, bring you guys content that could help all of us out. All right, so make sure you guys are subscribed and turn that notification bell. Now, before I go, I want to talk about the VIX. I think it's important to watch the VIX. Remember, it's the volatility of the S&P 500. That's the VIX. With FOMC tomorrow, I mean, if volatility is sure to increase. And if it does, I believe the VIX is going to be good to watch. It's going to be worth watching. If it's to be bullish tomorrow, guys, this ticker symbol right here, it doesn't move that often, but when it does, it is explosive. It's an explosive ticker symbol. It has an explosive personality. So it's important you know the levels and setups beforehand, because once it moves, you got to be able to move with it. And right now, the resistant level to watch is at 22.5. That's a fib level and also a sell zone. We rejected, it had some selling pressure today. So tomorrow, with an increase of volatility potentially, if 22.5 clears, that would be bullish for the VIX, with 24.3, 25.5, 26.4, and 27 plus all in play. It would be bullish above 22.5. If we are to get bearish, look to short below 20.8 or 19.5. Those levels fail, it's going to get nasty to the downside for the VIX. And before I go, coin. Okay, it's good to I think this ticker symbol is good to watch if you want to keep track of crypto, and it's also amazing to trade because it's super volatile. So if you love that volatile ticker symbol, coin is the one for you. But overall, it's looking bearish. It's looking bearish. We cleared a fib level on Monday, the 185.88 level. Today we broke below that level and treated like resistant. So if there is bearish follow through, we're going to need to break down some more support levels as usual. 180, 178.7, 177, 173, 171 would all be in play. I'm going to remain bearish below 185.8 overall. Now, if we are to get bullish again, we need the false breakdown setup. We have a false breakout setup from that 185.8 level, so it needs to be invalidated. For that to be possible, 182, 184 must clear first to put a back test of 185.8 in play. And if that level recaptures, that would be bullish and more upside would be possible up to 190, possibly sending us back up to 196 and 197.6. All right, all I can say is, guys, tomorrow's FOMC, if you are an inexperienced trader, there's nothing wrong with that. We all got to start somewhere. But if you are an inexperienced trader and you haven't traded FOMC just yet, I recommend just observing. Okay? Now, for the rest of you guys, let's be ready to kick some market makers' ass tomorrow. Sheep style, baby. It's gonna be plenty of vol. If my hunch is correct, his emotions gonna be, people's gonna be emotional. And emotions in the market is good for us sheep style traders. We thrive in that environment. So let's, fingers crossed, we get some volatility. And let's remember the setups, remember the levels, and react unbiasedly. Like I know we all can. Master traders, money magnets. Let's be ready to kick some ass. Bye.